If you're considering buying a nightly rental property in Whistler, BC, specifically one that's been in the rental pool or been with a property management company, you may have questions about how GST applies to your purchase. In this video, I'll break down what you need to know, how to defer GST, and what percentage of commercial use impacts your tax obligations. Before we get into it, I need to give you a disclaimer that I'm not a tax accountant. My name is Dean Linnell. I've been a real estate agent here in Whistler, BC for 25 years with the Whistler Real Estate Company. The following information comes from discussions with my trusted local Whistler accounting firm, BDO Dunwoody, who handles the Whistler tax accounts of many of my domestic and foreign Whistler property owners. They provided an excellent GST PDF handout that explains GST on the property purchases in Whistler in greater detail, and I've linked that in the contact details in the description below. So let's get into it. When purchasing an existing commercial property, meaning it has been used for short-term nightly rentals, the seller will confirm its commercial use. You have two options: continue using it for short-term rentals and defer the GST, or remove it from short-term rentals for personal use and pay the GST up front. This decision must be made before the completion date because the seller's lawyer will either require your GST business number or the GST payment at closing. So if you choose to defer GST, you'll need to register for a GST account with the Canada Revenue Agency and ensure your unit is being rented commercially, because the amount of GST deferral depends on your rental usage. The Canada Revenue Agency, or CRA, has strict guidelines on how GST is applied based on commercial versus personal use. So here's how the GST is handled based on how much you use the property for short-term rentals. If you plan to use your property for over 90% commercial use, meaning 90% of the time you've got it in nightly rentals, you can claim a full GST credit and defer the entire GST amount of the purchase. Let's say if you think your use will be 80% commercial and 20% personal, you must repay 20% of the original GST deferred at the time of purchase. This is a one-time adjustment, and you can continue using the property 20% personally moving forward. Now, if you end up renting it out for less than 50% of the time, then the property will be classified as primarily residential, and you'll be required to repay the full GST that was originally deferred. These percentages are determined when you file your first GST return after the calendar year of purchase. Before 2007, the calculation was based on a 365-day calendar year, where 10% personal use equated to about 36.5 days of owner use. However, in 2007, the CRA clarified that vacant days do not count as commercial use. Instead, their formula now considers actual rental nights plus personal use days. So the personal use percentage works out to be personal use days divided by the rental nights plus the personal use days. This means if your unit is empty and not rented out, those days do not count towards commercial use for GST purposes. If you choose, your GST returns can still be prepared using the 365-day method, but in the case of an audit, the CRA will adjust it to their actual usage formula. They may allow modifications based on economic factors, but they will not accept the full year denominator. Understanding GST on nightly rental properties in Whistler can be complex, but making the right decision before your purchase is crucial. If you have any questions, feel free to reach out to BDO Dunwoody directly, and their contact details are in the description below. Now, if you've learned anything new in today's video, all I ask is that you leave a like and make sure to get subscribed to the channel. You can also book a buyer or seller discovery call with me at the Calendly link in the description below. I'll catch you in the next video.